If you earn over £45,000, our current government has decided that you're not a working person, and this is the clearest sign yet that they're going to be looking to tax you more in the upcoming budget. Sky News has obtained leaked Treasury documents showing exactly how this government views a very large number of everyday working people. And let's be honest, we're not talking about the rich here. They've created a secret definition of who counts as a working person. And if you earn more than 45k, well, you've just been thrown to the wolves. This is their way around their manifesto pledge. They can't change the promise, so they're changing the definition instead. So what's actually happened? Well, Rachel Reeves and her Treasury team have been working behind closed doors. They've decided that only people earning 45,000 or less qualify as working people under their manifesto protection. Now, let's not forget what Rachel said last time. Working people are strivers who graft. And to these people, I say, I've got your back. Now, let's think about that for a second, because £46,000 a year, that's an experienced teacher, that's a nurse practitioner or a police sergeant. Are these wealthy elites? No, they're not lounging about. These are people up early every morning commuting to work, trying to save for a house deposit perhaps, or just keeping things ticking over as life gets more expensive for them. But according to our government, you're not a working person anymore. You're apparently fair game for whatever tax grab they can now think of. Treasury officials have been tasked with protecting only the lower two-thirds of earners, and that means that everyone else is open season. So what are they probably planning now? Well, what's being leaked is a 2% increase on the higher rate tax band. Now that sounds small, doesn't it? But don't be fooled, because right now this hits anyone earning over 50,271. That's the threshold that has been frozen now for years. And more people are being pulled into this tax band every year. And this isn't because they're getting richer, it's because of inflation. Now, if your pay goes up to match the cost of living, and then boom, you're suddenly a higher rate taxpayer. And what that means is for every pound that you make, they'll take 42p rather than 40p. So if your spending power has been falling in recent years, you can take off another 2% of that. With that in mind, it's fairly clear what this is. It's a strategic, calculated attack on middle-income working people. And this is people in almost the same position as those earning just £5,000 or £10,000 less. They're trying to get on the housing ladder when the average house price is around 8 to 10 times your salary and you're already being hit from every angle. How is this the logical group to go after? Because you've got to think, typically, people in this group are trying to raise kids, support their family, and they are already being squeezed pretty hard. But let's talk about frozen income tax bands, because even if you haven't had a pay rise for a while, inflation has potentially pushed you into higher brackets, and that's already costing you thousands. And then, the cost of living crisis has slashed your purchasing power anyway. Your energy bills have probably doubled. Your food shop costs around 30% more now than it ever has. But sure, let's tax you more because apparently you're not real working people. Now, that typical British dream of home ownership for many in this bracket and everyone below is becoming more of a fantasy, because you are stuck renting, watching corporate landlords get richer while you can't save for a deposit because the government's go-to is dipping its hands into your pockets more and more. So why would they be planning this? Well, let's be honest, they are running out of options. They've backed themselves into a corner, and as always, you can guess who pays. It's you. Now, they've recently gone after businesses, of course, with that 20 billion national insurance rise, and we know what that's done. Unemployment is increasing. Youth unemployment is at an all-time high. That's not really brilliant economic strategy, is it? So they've toyed with the wealth tax, and lots of people will back that. But the truly wealthy people have options and fairly watertight strategies. They can move their money, they can relocate, and they can restructure their affairs. In other words, they will literally just bugger off, and the government knows this. So then, who's left? Who can't escape? Who can't move assets offshore? That's you. That's middle-income workers who pay through PAYE. So here's some data. In 2010, only 3.3 million people paid the higher band tax rate. Now that's over 6 million, and by 2028, it's going to be closer to 8 million. And that isn't progress, that's fiscal drag and it's stealth taxation. This 2% increase will raise several billion a year, and it's not from millionaires and from billionaires. It's not from massive corporations. It's from people just like you, people who are already struggling to keep up. Now, because of their manifesto pledge, it's severely limited their options because they promised not to raise income tax, not to raise national insurance or VAT on working people. So then how can they blag it? If they can't change the pledge, well, how about change the definition of working people? It's like promising not to raise taxes on honest citizens and then deciding anyone who disagrees with the government isn't honest. It's Orwellian, it's deceitful, and it's exactly what they're intending to do. Now, they do think we're stupid. They think that people won't notice. And that's why I'm making this video. I'm here to give you a proper heads up so that when this budget does drop, you've got a good inclination of exactly who they're targeting. And if you are thinking, well, this doesn't apply to me, don't worry. They're not just coming for workers. The speculation suggests that they're going after pensioners too. Now, they're talking about restricting the 25% tax-free lump sum. And that means that the money you've saved for your entire life, they want more of it before you can have access to it. They're talking about potentially adding national insurance to pension payments. And you've paid, again, national insurance your entire working life. And now they're thinking, okay, start doing it in retirement too. Overall, they're looking at opportunities to increase income tax on pensions. And even if this doesn't apply to you, right now, you have to think that this is applying to people that have worked their entire lives. They've played by the rules, they saved responsibly, and now the rules keep changing, which punishes them. Let's just explore what else is being considered on the table here. There's threshold extensions that I spoke about. They want to extend those frozen thresholds again, and that will just mean that more and more people are pulled into higher band tax brackets without any real increase in wealth. There is talk of ISA attacks, which will go down really well, I'm sure. They're considering scrapping cash ISAs, that 20K a year that you can save tax-free, potentially kiss that goodbye because, God forbid, you're trying to build some kind of financial security. There's property taxes, and this is new taxes that could be introduced on properties that are worth over 500K. Now, you might be thinking, well, 500K as a property is a lot, but in London or the Southeast, that is a 3-bedroom semi-detached. It's a family home. There is also the VAT threshold, and I've mentioned this in my previous video. They are considering reducing the VAT registration threshold from what it is now 90,000 down to 50,000 or potentially even 30,000. And if you don't know what that means, it means that there's going to be thousands more small businesses that are forced to register and then start charging 20% on their prices. Who pays for that? You do, the consumer. So let's take a hypothetical snapshot here. Let's say that you have a salary of 55,000. That 2% increase a year. Then you've got to think about those frozen thresholds. That's probably another 600 to 1,000 as inflation will push people into it. There's ISA restrictions that could potentially come, which affects your savings potential. Pension hits, and that's going to cost you thousands later down the line, if not now, or when it does come into effect. And then there's those indirect costs, such as if the VAT threshold does get played with, those costs that you'll then have to pick up. We're talking about thousands of pounds per year taken from people already struggling, people who don't own a property, that are watching their standard of living decline, and they're working even harder, and they're standing still. And to be honest, this is about more than just tax rates. It's fundamental betrayal on the middle income workers, the people who get up early every morning and go to work. They pay their taxes. They don't claim benefits. They try to save for their future, and they just want to provide for their families. These are the people that are going to be targeted. And why? Because they're easy targets, because they can't escape. The government knows they keep working, they keep paying, and they're just going to keep taking it. So we need to call out these types of changes for what they are. They're a shameful attack on hardworking people by a government that is basically losing its way. They are making it harder for ordinary people to get by. let alone get ahead, while hiding behind wordplay and elite definitions. So yeah, I'm not here to tell you that everything is going to be fine in the upcoming budget, because it's just not, unfortunately. They're coming for your money, and it will probably be in underhanded ways. So here, though, is what you can do. You can stay informed and just don't forget their betrayals. Now, we're going to be covering the budget in detail in due course, breaking down what the definitive changes means for you and your business, and how you can then strategize to protect yourself. So make sure you're subscribed.